Now we're going to have a look at the bearish chart pattern cheat sheet, which you can see right before you. It's pretty similar to the bullish one, only everything is inverse or reverse. So if you have a look at the charts over here, the high probability trade opportunities are once again going to come from your descending triangle. That's one of the high probability setups, and it works the same way. So the only difference is over here you have equal lows where price is hitting into the bottom multiple times and creating lower and lower highs. Remember, where should the preceding trend be? Well, in this instance, it would have been up here. So the trend is moving towards the downside. Then you take from the base over there, measure the move, and price should hit that level a high probability of the time. Another one that we'll look at over here is the rising wedge, right? So the rising wedge price is grinding towards the upside, but it starts stalling out. It's getting into a tighter and tighter wedge, and ultimately it has to break down. Momentum starts to come down, volume starts to drop in this type of environment, and you take it again from the base to the bottom and you measure the move. And you can also look, this will offer additional support where the wedge began, and price often moves into that exact level. Let's have a look at some real life examples, and this one is near and dear to me, and there's a strong reason why. It was in 2018 December that I literally saved myself from losing more than half of all my money because I had so much money in crypto at this particular point in time. Everybody was saying that $6,000 was the ultimate bottom for Bitcoin. And you can see over here, the preceding trend is towards the downside. You set in the top around $20,000, came down, bounced, set in a lower high at $10,000, came down to $6,000, bounced another lower high, again, hold that level at $6,000, another lower high, hold that level, and then momentum just started to disappear. Volatility disappeared out of the market, and everybody said that is the bottom. But I sold everything. I said, well, I'm actually going short at this level, and there's your descending triangle. Lower highs, you take your measured move from the top to the bottom over there, take your measured move, and look at that. It hit to absolute perfection. It was a mammoth 44.81% move towards the downside, and most people did not see this coming, but using a little bit of pattern recognition, you too would have saved a whole lot of money. Let's have a look at the next one, which is going to be the rising wedge. This is on the ETH BTC ratio. You can see Ethereum versus Bitcoin over here was moving up in this rising wedge. So you draw in your trend line over there, you draw in another trend line from the top, marking off where those levels are being met as resistance. And unfortunately with this one, you would have only been able to enter on the confirmation of the break. Sometimes you get in a little bit sooner. You can see a strong impulsive candle towards the downside, closed over there, and that's where you start to enter. You have confirmation of the breakdown. You set your stop loss above the breakdown level, above that candle over there, and the measured move took you all the way down that 6.79% downside move, which gave you a 2.68 to 1 risk to reward ratio. So in the next video, we'll look at neutral chart patterns, which means that price could break either way, either to the upside or the downside. I'll see you guys all there.